Hello, good evening to you. Thank you very much to join with me in this session. This session is basically made for the student friends, graduates, then would be industry captains and practicing managers. We will discuss only the basics of the business and business administration and accounting. So let us understand exactly what do you mean by business. So business means any activity which is taken up by the company or a group of persons to make profit. So profit, how we calculate profit? So profit, basically we calculate sales minus cost or selling price minus cost. And this is one of the most important decision variables in the business document called balance sheet. So while we will be discussing about the balance sheet in the next session, so we will see that how this particular figure, the profit, it will impact the entire balance sheet, which will ultimately focus on the financial health of the company. So first session will include and we will cover what is business account and what is business accounting. So account means basically these are the transactions, the business transactions, and we call it different business accounts. For example, in any business, so we purchase raw materials, we pay rent, we pay salaries to our employees, we pay interest for the loans taken from different banks or any individual, and of course at the last we include sales, a very important figure, and then we calculate what is the sales figure and then we deduct the total cost. So the business account means the business transactions, and we make different accounts on the basis of the business heads. And the business accounting means, this is very interesting, that we include different stages of the accounting. And why we include different stages of accounting, that is very, very crucial to understand for any manager. So first is the collection of data, or we can say the business data. So business data, this is in huge form and it is unmanageable. So that is the reason we jot down all the business data in the form of journal, and this is called journalizing. This is the first step, this is journalizing. This is the journalizing. So all different accounts, business accounts, are jotted down in this journal so that it should not be scattered. It should be in a one particular book or file, and then we will, next part is we will calculate the balance of different business account. and this is called balancing, and in between this is called the ledger through which we take up this task. This is basically is through ledger. Posting. So first journal is prepared and then we go for the posting. This is the second part for ledger, and then from posting we come to balancing. So these are the stages of accounting, and we will discuss in details how we follow the business rules, the accounting rules for journalizing, and then we will take up one simple example, then how we go for posting and balancing, and then we try to make sure that whatever we have done in journal and ledger are correct. Otherwise, what will happen that while we will be preparing the balance sheet, it will not give you the true picture. So this is about the first stage of business account and accounting. So while we go for accounting, so this is very simple, but we have to understand exactly how we go for this accounting job. What we do, we classify the business accounts in different category. In business, we interact with so many people, including shareholders, number one, who are very important stakeholder of the company or the business. They provide capital to the company. We interact so many suppliers, not one, in corporate world. So they supply raw materials. We have n number of employees. We pay them the salaries and wages for the factory workers and salaries for the employees. We pay electricity bills to a particular electricity board, so the other organization or the body. So that way we interact with so many people. So first category is personal account. So this is the account where we interact with the persons. Next, we go for paying different expenditures for the company, and we collect income, and for that we pay money to the supplier who will supply the raw materials. So raw materials is the expenditure, rent is expenditure, electricity is another expenditure, very important, and salaries, a very important expenditure. And if it is service sector, then this particular business expenditure head is very important for service sector. While in case of manufacturing sector, you will find that most important, the business head or accounting head is purchase. So the expenditure next is your expenditure and income, that is called nominal account. Nominal account. And the last you will find we will have different machines, land and building, furniture and fixtures, then the stocks which will be used in the coming financial year, and of course the bills. We will discuss the separate session on bills. Bills means sales against credit. So our money, it is now lying in the market. We have to collect the money from the market, from different persons, different debtors. So bills, that is also there. And at the same time we take loans. It may be long term loans, it may be short term loans. So we have the creditors. We may get raw material against credit. So the person who will give us the credit, so he is our creditor or she is our creditor. So the last is your real account. So here we follow different rules while we go for journalizing the business accounts in the journal. So personal account, the nominal account and the real account. And this rule is called golden rule. It will remain as it is in the accounting world. So what is that rule? Very simple. There are two sides. One is debit, another is credit. So in personal side, so what kind of transactions we do? We give loan to someone, maybe if we are in banking business, or we get loan from different banks if we are in manufacturing sector or service sector. So here it is very simple that credit means debit and credit. Debit is the receiver and credit is the giver. So the receiver will be the debit and giver will be the credit. For example, if I am giving loan to Messrs. X and Y company, say for 10 crore. So I am the giver, so my account will be credit and the X and Y company will be debit. Very simple. And just opposite, if we are getting credit from Messrs. John for supplying raw materials against credit of say 10 crore, say Mr. John will be the creditor and we will be the debtor. So the same thing. In that case our company will be, account will be debit. So this is one rule for personal account. Next is nominal account. Here all expenditures are debit account and all income accounts are credit account. If we are paying say salaries, so that means salary account will be the debit. And here this is one way we can explain. So expenses and income. Here the rule is, this is the first rule, this is the second rule. Here another rule is, what comes in debit, what goes out is credit. So what comes in debit means, suppose we are getting cash by selling our product. So the cash is coming, so cash will be debit. And in case we are paying salaries to our employees, goes out, our cash will go out, so it will be credit. So cash is going out and what are the heads? Salaries. So salaries account will be debit and cash, we will pay cash, so our cash account will be, or our company account will be credit. And the third one is real account. All assets are debit. That means if machineries, means it is debit balance or it will be ultimately debit account. How it is Again, machineries we are going to purchase from, say, someone, Mr. X. So, machine will come, what comes in, debit, what goes out, again the same rule will be applied for real account also. So, our cash, or if it is credit, then his account will be the credit. So, Mr. X account will be credit. He is our creditor. So, it is we will take up one simple example and we will try to do the accounting entries also, because what we believe that the managers, they should thoroughly understand the basics. We are not going to train the accountant. That is also a very important job, because you cannot take correct decisions unless your accounting procedures are robust and foolproof, because in that case your entire exercise, your entire planning, your entire control system will be of no use. It will be just sheer wastage of time. So, better you try to check that your accounting system, your accounting procedure are properly maintained or not. So, we should understand exactly what are the behavior of the data, business data, and those are called decision variables. On the basis of the managers, they take decisions, and the only task of the managers is decision making. So, ultimately this is the main task of any manager. So, we will discuss from scrap. We will try to understand exactly how the purchase, this is the figure, it will behave, and how it will be directly impacting your balance sheet. How sales figure will be utilized or will be used for your decision making. And as per my own experience, after serving 20 years as a manager and management consultant to the biggest bank of India, State Bank of India, we, the managers, we work on projections and we prepare balance sheet for, say, if it is term loan, then maybe 20-25 years. Coming 20-25 years, projection is not a matter of joke. So, we have to understand the behavior of the decision variables, the data. And that is the reason, that's why what we have decided that I will discuss, I will share my experience, very little knowledge, so that the managers, they can get some inputs in business accounting, business management, and of course, very important decision making area. So, okay. So, now this is very interesting in the sense that now next part is ledger posting. We will try to take up one exercise where we will be posting from journal to ledger, and then we will go for the next stage, the balancing. This balancing means we will get some balance after, say, 100 of transactions in purchase account or 100 of transactions in salaries account. Then finally, we will see what is the balance remaining in that account, and that will ultimately be impacting at the last, while we will be preparing the final account of the company, the sales figure. And then finally, we will see what is the profit figure. And very interesting, I can tell you that if we properly set our marketing projection, sales projection or target, we can draw from that particular figure all necessary variables, purchase, then stock, then your employees' salaries. So, this figure is very important for the projection, the cells. So, okay, the next stage is after journal, we will prepare ledger, and then from ledger we will check that whether we have correctly put all the entries in place or not. So, that is why we prepare trial balance. This is very simple. So, we will check up that whether our entries are correct or not. So, the trial balance must be tallied. That means all debit entries must be having corresponding credit entries. If there is something wrong, then we have to check our account again and again, and we have to be sure that it is correct, properly entered. Then the next stage will be your balance sheet. So, let it be very simple. As I have told you that the managers are not supposed to work on accounting system, but they will accept the data supplied by the accounting department. So, if you know exactly the behavior, the intricacy of accounting, then only you can correctly accept the data. Otherwise, your decision will be wrong and you will be personally responsible. You cannot say that I could not understand this data, that is why the decision is wrong. It is not acceptable in the corporate world. So, you have to understand, because ultimately the managers, the general managers, the CEO, he will be signing the balance sheet, not the accountant. Signing means you have accepted all the data, you have checked. So, that is the reason, that is why I want to discuss from basics. I believe that decisions are basically taken on the basis of basic concept of the subject. It is very simple to me. And then what we do now, we use the technology, the advanced technology, to basically the collection of data and analysis of data, and at the same time we, through using different technological tools, we calculate different projection, that is basically objective analysis. We will put data and we will get, by using different models, mathematical models. So, we will get result. So, that is objective analysis, we do that. But nowadays what I believe, that in addition to objective analysis, the subjective analysis is more important, because it is basically depending on your knowledge, your experience, your wisdom. Otherwise, it will easily be copied by anyone. So, whatever decision you will take, maybe it is unique, it cannot be copied. So, I cannot prescribe that how you will take the decisions. What we will do, we will try to understand how we will proceed, how we will prepare ourselves to take the decisions, of course, as a manager. So, the next part we will discuss about the balance sheet, and you see that all personal account, nominal account and real accounts, the rules are very specified. You have to set the rules, and accordingly you put your entries in journal and your ledger. And then at the last what we do, we set all the assets and liabilities in balance sheet to know what is the financial health position of the company. So, in that case, we will go in advanced stage of again business accounting or business management, that is analysis of data. And you see that this is very, very important task of any manager, where we, even today, we go for detailed analysis by using one of the most important tool is ratio analysis. We will take up that session in different coming sessions. Very interesting and very, very scientific to take the decisions. So, this will basically prepare your base how you will take decisions. And decisions means one thing I want to share with you, that whenever you will take decision, and we will take decision as a manager. So very important part is documentation. The documentation is important in the sense that we will be working on future data, the projected data. So in the document it will clearly be mentioned that how we have made the projection, whether it is on the basis of objective analysis only, trend analysis, or we have done trend analysis and at the same time subjective analysis, also very important for us, and we have done that, and where we have applied our feel about the market, our exposure about the market trend, our own wisdom about the entire business world, because nowadays we cannot say that we are only confined in a particular country. We have to work as per the global practice. And in this global business world, this is the global village, we say that the data we can transfer within a second. So that is the reason we, the managers nowadays, are very, very, you can say, the serious about the decision making. And my prescription is, while we will be working as a manager, we must enjoy our role. If we are in stress, we cannot take correct decisions. Decision means, you see that 100 of decisions, lakhs of decisions we can take in during our tenure, but not necessarily all decisions will be correct, because we will be taking decisions that what will happen after 25 years, the strategic decisions. What will happen after 5 years, short term decisions. What will happen in the next year, again the short term decisions. So not necessarily every time our decisions will be correct, but our document should be thoroughly prepared. And that is the reason, that's why the managers, they are supposed to work on the document. So so the next session we will cover on the entire exercise of the journal, and then we will go for ledger, and then we will prepare balance sheet, and we will see that what kind of assets are there, what kind of liabilities are there, what are the treatments of those assets and liabilities, and how we will finally go for, on the basis of this data, how we will take decisions. Thank you very much. Be with us. Hope you will raise the comments, and again I repeat that we will discuss from the basic concepts, and I believe on the conceptual learning, and experimental learning is very important, because we will take up the learning and we will again see that whether we are correct or not. So we will take up different exercise. We will first of all discuss, and then we will take up different exercise, and then we will try that, okay, whatever we have done, whether we are going in the right track or not. Okay then, thank you very much. Be with us.